Good morning, ladies and gentlemen. I hope you are having an amazing day. This is Rob with Market Mornings. Let me know if you all can hear me. If you please type the number 1 in the chat box, let me know that you can in that comment section. It would be great. Nothing worse than talking to myself for the next little bit. As we get started here, keep in mind that everything we look at is for educational purposes only. Nothing's meant to be advice or recommendations. Got a lot of places for you to follow along with various content that we put out there, folks. Make sure you are on top of it. We've got a ton of information going across multiple platforms every single week. So make sure you pick up on all of it. Thank you for all the ones. I appreciate it. Morning Trip. Robert, Joan, Erica. Thanks, Sean. In today's agenda, we're going to go over the upcoming economic reports. We're going to talk about futures. We're going to look into the previous day's trades, today's candidates, and then your stocks. So with that, let's go take a look at first the economic reports. So we got nothing out there today but a sea of red coming up, including the Fed coming out on Wednesday. So definitely keep your eye open on that. Unemployment claims could play into it. It's orange. It still, I think, should still be red right now because when it does shift, it's going to shift hard. So there's a lot of red this week, but nothing to really be concerned with today, which means we're kind of clear for our trading today. So let's go take a look at the futures. All right. So now we look at futures, and the ES is down 22 points. The Dow is down 169. We're kind of on the lows of the day right now. If we look at the ES, right, this was our lowest low, so we're getting right there. Right, we're right in that range. But after the amazing run we had on Friday, and of course we did, we were in class training all day on Friday. Right, we had a great class, great training. Tripp was there with us last week, and many others. First, Brandon taught on Thursday. He did a full day training on a day in the life of an online trader. And then on Friday was our super summit with all of our Inner Circle and Mastermind members coming in. And we even live streamed it for those that couldn't make it there. We got some feedback. The live stream was pretty good, so I'm excited about that as well. But we didn't capture a lot of this run. I didn't get a whole lot of chance to trade anything on Friday because of training all day long. But then we came out of the gate last evening at 6 p.m. and we gapped down. We just went sideways for a little bit until about 4 a.m. We had a nice drop. A push back up about 7:30 this morning is where the fail came in. We could not get up to the previous highs, and we've dropped off. We're sitting right now at this basing pattern right in here. And the next question is, are we going to break through that? If we do, look down for that next set of lows, right? So most indexes looking just like the ES. As I said, Dow's down now. The Dow is down now 170. The NQ is down 80. The RUT is down 7.5. Bitcoin's up 100 points. We're back up above 20, near 21,000. Holy mackerel. Then we've got Ethereum is up 63. They're at 1,600. You've got gold is down 3, and crude is down 165. And crude is down on fears of China and COVID shutdowns and all of that. Goods and bads, right? The price of fuel is down because oil is down, gas is down because of less usage. But now there's the fear of Apple of are they going to be able to get enough chips, because that's a major chip manufacturer. The town that I guess it's happening is an Apple town. They kind of own it, right? It's them that keeps that thing going. So we'll see how that all plays out. Let's go ahead next and take a look at trades from last week. So this is all on you, folks. You drop them in. I'm not going to wait. I'll read them out as you do. As I said, I did not get anything off on Friday. Not Thursday, but Wednesday, I did have, because I own an Amazon position, and Amazon announcing earnings last week. I did not write covered calls on in case it was really good earnings. I didn't want to have it gap up and get called away from me. So instead, I bought some protective puts. I didn't cover everything on there, but my cost in the position in Amazon, once I closed out of the put position, would have only been, a couple of percentage points. It was very small. It was $2 or $3, $4, something like that. So I didn't, it's about $3. I didn't take a big hit by the protective put. And that was pretty much the last thing I did outside of managing the covered positions I had. All of my other, my naked puts on Tesla expired worthless. All of that worked out wunderbar for me, right? Very excited. I'll be looking at that this morning again. First thing, I'll be looking at naked puts on Tesla. writing cover calls on my Amazon, writing cover calls on my Google, naked puts on Google because I do want to acquire more of that. My naked puts expired worthless on them. All right, so Robert put in NVIDIA bear call spread 10 cents, SPX bull put spread 40 cents, SPY call 28 cents. There you go, looking to take more profits this week as other spreads bring in profit. Excellent. Good job there, Robert. Good job. Good job. Good job. All right, so let's go take a look at today's candidates. So as we don't have a lot of trades to look at from last week, we don't have a lot of candidates to look at for this week either. So let me open up my option chain over here. We got that. Erica said Goldman Sachs will put spreads still in the trade. Excellent. Good, good, good. Keep us abreast of how it goes, Erica, on that. All right. So then we've got our candidates here. So Apple is the very first one. Now, I made that comment already about the COVID slump, right? So Apple is looking at a firm is touting that there could be a 30% drop in sales because of this COVID issue in China. So if that is the case, there's potential for the downside. Now they're down $1.80 on that news today. It puts them down at 154. Let me just pull this out a little bit. So it puts them down at $154. So we're still above that 153 level. So we are in a bullish bias here, guys. We are looking at the bearish news. I'm only looking at this for the day. I'm looking at a bear call spread above 157. Aggressive, because we're in a bullish bias, meaning just take smaller number of contracts or a long put. And why long put? I trade Apple. I know Apple well, right? So absolutely want to do that. All right, guys, there's only four left now. So start now, dropping the candidates in that you want me to take a look at. I'll remind you again in another minute, but start dropping them in now. Caterpillar, CAT, they got a downgrade by UBS. CAT is down $3.34. It puts them at 216 even right now. So we're going to look at a bear call spread above 219. Now, this is a downgrade. It is not an analyst saying, oh, we could see less in production from Apple. This is an actual downgrade by UBS, and they downgraded them from a buy to a neutral, I think it was. But whatever they took them from, it went to neutral. So that neutral is saying, yeah, we're not saying you should buy or sell them, but it's saying we're not telling you anything, which says we're not recommending it either. So I think that it's got some potential to the downside for that, at least down to that 211. So look at the bear call spread above 219. Right? CVX, again, there's only 3 candidates left. Sure, Eric, I can go through Apple again. Absolutely. So what I was saying on Apple, Eric, is a bear call spread above 157. Right now, Apple is 154. So we're right about there. Right where my horizontal line is where we are. So we're looking at a bear call spread above that 157. Or for me, it would be a long put option. Pivot, something directional based on the news for Apple. All right. I hope that helped. Let me know. All right. So now we're looking at, did we do CAT? We did CAT. Yep. CVX. CVX got a downgrade, which is Chevron. They got a downgrade. They're down $1.63 right now. They've had great runs to the upside, guys, as all of these stocks have, the energy stocks. So we're looking at 178.35 is the current price. So I am going to look at a bear call spread above 185 aggressive. Meaning if I'm going to take the trade, I'm going to take it with a small number of contracts. All right? Only 2 left, folks. Anything you want me to take a look at, drop them in. Tesla. So they're taking a stake, potential. There's talks of them taking a stake in a company called Glencore, right, which is in their industry. And let's get the whole fib picture in there. But they're down on that news today. Now, I would not put all of the weight on Glencore, meaning I don't think it's just that. I think it's the purchase of Tesla, purchase of Twitter by Musk, all of the news that's surrounding it. Are the layoffs going to take place? The tweet that he made in comment to Hillary Clinton's tweet. All of those types of things I think are playing into or going to play into Tesla over the next little while. So definitely something to be cognizant of, okay? But they are down right now, 205. Guys, you know, the great thing about Tesla, right? Right now, if you look, if you're okay with owning Tesla, meaning at some point they make you buy the stock, right? Do you realize that you can go on and take a risk on at $210, take $1.56 in premium, and have only a 16% chance of being wrong in this trade by Friday? 16%. That's it. And keep something in mind. 210 really means you're buying it at 208.5 because they're going to pay you $1.50 for it. So your risk is even less than that 16% because of that. You have a further down adjustment. You're probably closer to 10 or 11% of risk on in that trade. All right. But I like it. This is some of the stuff I will be looking at for sure today on Tesla. As I said, I want to add to my position that I own now. So listen, I don't think Tesla's going anywhere. Okay. The only reason I'm not jumping all over Twitter at this point is I think there's a lot of mess that Musk has got to clean up. Once he does, if he has any say in what goes on in that company, then Twitter's going to be the next one I'll be looking at as longer term for him, right, with him. So there's Tesla, and last we've got WYNN, W-Y-N-N. Now, they're the only one on our list today that is up. They're up 370. There's a gentleman that took a 6% stake in WYNN, which jacked the price up. So we're looking at $62. So we've got 58 to 66. That's $8. So we need a fib it in there. Let's see, 66, 7. Okay, we need both the negative 136 and the 118. Needs to set up in there. $136, 118. All right. And if we're sitting at 62 right now, so we are right up against that resistance level there, that's 62.23. So we could look at a bull put spread. Oh, I didn't tell you what to do on Tesla, did I? At least I didn't write it down. Bull put spread below. We're looking at WYNN. We're on WYNN. We're at 62 right now. Bull put spread below 58. All right. Let me go back to Tesla. I'm talking naked puts, which I definitely will be looking for a naked put on Tesla. But also, if we're sitting right now on Tesla, we're at 226.5. So we're 226.57. We're right below that level. News driving it down. Guys, it's hard to take it right at that 226 level because a little bit of a fudge either direction, you're underwater. So we're going to look at, because it's bearish news, we're going to look at a bear call spread above 245. I don't know what we're going to get on Tesla above 245. Let's see, just out of curiosity. Kicks and giggles. I mean, okay. So you got 35 cents for the 245, 247 halves. That's not bad whatsoever. Right? Not for that far out of the money. All right. Excellent. So let's see what you guys got on your list for today. Erica's, you're welcome, Erica. Jones got Netflix. All right. So they're down $1.71 right now. All right. So they're down $1.71, 294. They're in a true bullish bias right now, Joan, right? So great move to the upside, phenomenal push since their earnings run, right? Which is that gap in there. It's been a great move for them. Right now, anything above that 300, Joan, as far as bearish today is what I'd be looking for, right? So look at that rollover on off of that 300. I'd like to see it stretch back up a little bit first, but a little bit aggressive at this point. But 3 days in a row, and I talked about this yesterday in power option plays with those tops rolling over like that, looking at more weakness. And we were down to 293 the other day on Netflix, right? So we've got to break through that level. So I need a retest of the 300 and a fail, or a break of the 293, a retest, and a fail with the 283 as the downside target. Hope that helps. Let me know down below, Joan. Trip said AMD has moved from hovering on the 382 to hovering on a negative 272. So let me actually change this over. Trip, I think I changed, because what am I working on today? Monster market movers, right? I think I changed the fib on it. I don't remember now. Possibly, don't remember. Anyway, I've looked at about 450 stocks this morning so far. So let's see. I love the move. It's just nothing bottomed out yet and gave me a bounce for a redraw here, right? So right now, it looks like we probably have the same fibs. So let's see. The 272, still a good switchback setup, better to the upside, probably a bull put spread instead of directional. Yes, Strip, I agree with the, so right now we're at the 272, right? There's a confluence of the 21. We've been sideways here. If we look at it from this rectangle here, we were sideways multiple days in there. If we come back in and look here, we have another rectangle setting up right in there. It's almost like a Darvas box, right? So we've got sideways move for 2 weeks. We've got another sideways move for a week. So I agree with the credit spread component instead of directional. We just don't have the legs on it yet to consider that directional trade. So I am with you there, Trip. And I do like the upside better, although they are down $1 today. The downside, you've got 59.80 is our 8 moving average. And right now we're at 61. So we're just below. So you've got $1 move to the downside. A little tight. Robert said, check out Zoom for a credit spread thing. We'll put spread. Okay. ZM. Let's unscrunch that puppy. And where is it? Pre-market. So, Robert, the down 71 cents right now on Zoom. Zoom just made it on one of my lists for monster market movers. All right, let's pull that out. So they're at 83.5 right now, Robert. So they've come down. For me, the bull put spread, you got to be cautious because of where we're at, right? So 83.5. So we're sitting right about our 55 moving average. I'd love to see the move get back up about above 84.73, Robert, for the bullish pattern, and then take the credit spread. If you're looking at it today, the stock's got to remain above that 81.68 level yesterday's, Friday's closing 8 moving average price. All right. Hope that helps. Let me know down below. Sean said Glencore mines materials needed for the ion batteries. Smart move. It is. I mean, but it's Musk. Right? I don't question a lot of what he does, at least business-wise. Maybe personal, possibly, going on TV and saying how much weed he smokes. But so Don and Chris, last week, SPX, Baidu, and Netflix all closed at a profit. Ka-ching, Don. Great job. Erica said, so far, the naked put on Tesla, I should buy the 210 put. I never done this before. Thank you. All right. So, Erica, first off, if you've not done it, make sure you test it on paper before you do this for real. And you're not buying it, you're selling it. Right? So if we go back and look at Tesla real quick, and now I just picked the 210 as an example, right? And why I did that was things are going to change a little bit price-wise, and delta-wise. You want to be a maximum delta of 20 when you sell a naked put. That gives you a maximum of 20% chance of being wrong, which means 1 out of 5 of these trades you're going to get either exercised on, you're going to have to buy the option back, pay a little bit more for it than you sold it for, right? So the 210 basically said this: if you took that 210 trade, they're going to pay you $1.56 per share, $156 is what you're looking at, right? So $1.56 times 100 shares, not 156, whatever it is, right? $1.56. My math brain is not working today. So and then by 10 contracts or how many contracts you're doing. So they're going to pay you that $1.56 per share. The worst thing that can happen is, and when I say the worst, it's a matter of what your opinion is. If you want the stock and it drops down to 210, they're going to force you to buy it at 210, but they're paying you $1.50. So you're really buying it at 208.5. Okay. If the stock goes up or stays above 210, you keep the premium and the option expires worthless. Right? That's the way the position works, Eric. All right. So again, if you've not done it before, I would say do it on paper first before doing anything with real money. All right. And it looks like we're done there, folks. So with that, keep something in mind. We have coming up this week, guys, you've got a lot of red reports on for economic reports. So today at noon, we've got Power Hour, right? Thursday, I think it's 8 p.m. This on Thursday, is how not to get your ass kicked in the market, okay? We're going to go through some strategies to protect you there. These and everything that's on this page are all free trainings. So take advantage of it, folks, and capitalize on that, all right? So make it a great day. Make it a profitable one, and I will see all of you at our next update. Take care. See you then.